Hey guys, so welcome to another episode here at Tuesday's market breakdown. I believe this is episode 51. We're just about to hit 52, so that means 52 weeks of consecutive analysis, but we haven't been doing it every single week. So basically it's just marking at least an end of an era, our first year, and beginning from the after episode 52 we'll be sharing some very good live analysis here with the team, so expect something special at that time. So as usual, I use Elliott wave analysis, which we extensively teach in our courses, so you can always get a chance and purchase our courses to learn more about the Elliott wave. So what am I watching? Basically, this is the weekly chart. You can see the pattern that formed here, formed that A, B, C, D, E, beautifully formed that E top, which was a double top formation. I've been covering this for a long time. So moving forward, what are we looking at the moment? So something I'm paying attention to is this liquidity level that you can see market rejected at this point. Maybe if I can mark it at this point, and you can see market tried to reject it at this level. We didn't come right into it, but now market sort of, when we broke at this level, market came back down, touched it, and now market has come back to that level yet again. So we're paying attention to that level. As long as we remain below this level, we'll be looking to short this market. But there's another line that we're paying attention to, which is acting as a support. So if I take my ray, if you look at this line that has respected here, let me take it a bit lower. So using that, you can see it was respected here all this time. Let me zoom that for you. It was respected here. Moving forward, it was respected here yet again, and right now it's acting as support. This is the level 1.3550 level, so make sure you have that level. It was rejected here as well, so we're paying attention. As long as market is above this level, I will not be looking for any trade. So what am I looking at? I'm looking for market to break below this level and close below before I continue with my short bias. If we go back up, if we're able to close above this liquidity level, then I'll be going long, and that is on the weekly chart. But let's move down to the daily chart and see what is happening currently. So currently, as you can see, this is the line I'm watching, this yellow line that I have over here, which market respected beautifully. We broke up above it at this level, and moving forward, that is the level that is acting as support at the moment. So let me take that back to the weekly chart and remove it from here. So currently what I'm watching is that we're in this channel formation to the downside, in line with our 78.6, which market respected at this level and shot back up. I'm still remaining bearish on this pattern. So what I'm looking at, if market closes above this channel formation, then I'll be changing my bias to go long. But as long as we remain below this level, using my Fibonacci as well, using this point as the higher low and this point as the lower low, if I take 61.8, so we have 61.8, which is around this level. So as long as we remain below this level, I'll be looking to short this pair. If we move down to the 4-hour chart, a lot of patterns have been forming here. We can see there's a 1 2 3 4 5 formation that is forming, currently forming our 4th level. We had this sort of wedge formation, market formed that ABC formation, then we dropped back down below. I remember I took a short position over here. I shared on our group, our public group on WhatsApp. I shared that short position which I took, and market tumbled all the way down to this level. But currently market has been moving further up, so I sort of have this channel formation. But if you move down to the 1-hour chart, I have a much better channel formation to the upside, which market is respecting at the moment. So we sort of have this pattern. Market came back down, had that wedge formation, immediately we broke up above it. Market has been moving further up, so I'm looking for market maybe to come back to this level over here. As you can see, this was a very liquidity level, bounced here once, twice, had that third touch. So if market comes back around here again, then I'll be looking maybe to remain bearish. But if you close up above, I'll be going up. So currently on this one, I'm 50-50, not really trading it as much, but I'm looking at the patterns that are forming. Sometimes it's really good to stay out of the market and just watch. But I've given you my analysis, what I'm watching, so you can apply that to your analysis, and maybe it can give you an edge using your own Forex analysis. So with that said, I'll move on to the next pair. So this is Aussie dollar, which is the last pair I'll be doing, then Ken will cover the rest. Basically you can see this is long-term view. This is the channel formation I have, which market has really respected. We had this first bounce up here. We had that first, let me just mark it. We had that first bounce, second bounce, third bounce. After forming this beautiful wedge pattern, market dropped further down with a lot of impulse, a lot of momentum, and currently we are coming back to that level. As you can see, I've marked 61.8. So around this level, we're sure market will be rejected. I'm not predicting further lower lows, but we'll be respecting this channel formation, at least for the meantime. So currently, I'm paying attention to this level that market has entered, finding resistance at this level and support at this level. So you can see earlier on this week, market spiked up. That was yesterday. We rejected that level yet again, entering this resistance level, and then we're yet maybe to see what will happen. So that's what I'm looking at on this one. If we go down to the daily chart, we have this channel formation that market has been respecting. So you can see we've been having this upward channel formation, which currently market is not getting that momentum. This is what I'm paying attention to. If you look at this level over here, market is sort of gliding above this level, just this level. So we're not getting that strong momentum to the upside. Market came down. We came down all the way to touch this level, but going back up, we're not getting that strong momentum, that strong bounce. Like you can see over here, we got that strong bounce. Over here, market sort of get that strong bounce, but currently market is just retracing at the moment. If you take your Fibonacci and take this as the top and this at the bottom, you can see market sort of came back to 178.6. Let me get rid of this one. You can see market came back to this level and market is rejecting that level. So expect also USD, Aussie dollar, maybe to drop further down, especially if we break below this trend line. If you go down to the 4-hour chart. 4-hour chart, you can see this is the same thing we're talking about. Market has just been gliding over here, getting that strong pushes to the downside, and that is what we're getting. If you go to the 1-hour chart, I shared this ascending triangle analysis with the team yesterday. So what we're paying attention to is how market rejected, how we were when you're analyzing the market, it's not what is important, is how we get to a certain level, not when we get to a certain level. So how we get to it, and how we got to this level, market was forming this wedge formation. We had that false breakout, market broke up above with a lot of momentum. Many people got spooked thinking the market is going to go further up, but what did we happen? Market closed back below that level and is shooting further down. So expect the market to still continue going further down, maybe even to come and touch our trend line yet again before we get that clear direction of where market is going. So basically, you can see this one is just in a sideways movement. I'm not really fighting with this market, not participating in it, but we'll be waiting to see a breakout on either side of the market. So that's basically what I have for you guys this week. So I'll see you guys next week.
Economic recession and a bear market.
This is the time we tell you people to sit tight and watch the markets closely.